Testing. Wait 1 sec. Okay, go in the front.
Sound check.
I just fed him too.
Sound check. Sound check.
Yeah. Yeah. Okay, sorry. Sorry.
Is there a delay in the?
Yeah.
A little bit, not much.
Okay. Hi, everybody. How y'all doing? Happy New Year. So good to see everybody. You all look very attentive tonight. So I'm sure you're really excited to hear about taxes, right? Almost favorite subject of all. So yeah, I've just been dodging back and forth. So trying to see as many people as I can when I'm in the northern office as opposed to the southern. Want to welcome everybody down in South Carolina who's live streaming down there, or if you're in your home live streaming, hello. Hope you can hear us okay. Pat is, you all probably remember Pat, right? Yes, of course. Yes, that's right. So Pat is basically going to do your presentation tonight and bring you up to date because he is the CPA and the expert. So I just wanted to welcome everyone and remind you, you do get tuition rewards points for showing up tonight, for those of you that are enrolled in the tuition rewards program. So that's always exciting as well. And I think that's about it. I didn't really want to take too much time because he's got a lot to talk about. All right. I hope to see you again at our next event. Okay. Thanks, Pat.
Thanks, Kathy, for the warm welcome. Hello to everybody down south and at home. We have some decent weather today too, right? So compared to what we've had, but we have a lot of folks migrating south, right, as time goes on. So I lost my clicker. Excuse me. So tonight, obviously, we're going to talk about, what I see coming for 2025 and 2026 and possibly beyond. And kind of how the election is shaping, where we're heading from here. So, 2024 was a year of complete uncertainty, right? And Kathy and I have been talking to you over the past several years since 2017, right? That, hey, tax rates were on sale, take advantage of some of the planning opportunities, and some of us have been able to implement that fully. Others couldn't get everything done due to certain parameters, still working, other income, trying to stay within those tax brackets. So maybe this is an extended opportunity down the road to get more done or enjoy the benefits of what you've put in place already. 2025 is not a year of certainty, right? It may have felt that way after the election. Okay, well, whether we were happy or not, this is where we're going, right? But as we're going to get into tonight, there's a lot that's still going to be up in the air. There'll probably be some surprises. And how do we navigate that together, right? So, and what does this mean for your retirement? Because that's really what we're here about and what we care about. So, prior to the election, one of the polls out, 80% of Americans felt that, hey, the outcome of the election is going to affect our retirement. Voter concerns are inflation, the tax rates, changes to Social Security and Medicare, right? And ultimately, what effect of the markets and the performance of our investments going to look like? So what we're all about is having a well-constructed plan, right? To navigate all of these noise and uncertainty that we're talking about. Interesting. Does the stock market favor a political party? Meaning Republican, Democrat in the White House, or who's controlling Congress? Personally, it's kind of a mixed bag. There's some that, there's articles out there saying one versus the other, but, I can kind of give you an overview of that. Markets performed well both ways. So as you can see, 1 year after an election, again, markets like certainty, right? Even if, someone says, well, stock market, growth, like we favor, you would think maybe one party's favored. Not necessarily. The market likes to know what's going to happen. When you have complete uncertainty, you get a wild ride. We got a phone call? So the exception of 2000, when you have the dot-com burst, right? Otherwise, 2008, COVID, you see, 20+% gains in some years, 34%. So market likes certainty, right? Kind of didn't matter who won these elections. So then we look at a couple different scenarios. Markets performed best when you had a divided Congress and a Democratic president. or next, not too far behind, unified Republican Congress and presidency, like we currently have, followed by united Democrat and then divided Congress with a Republican president. So I guess the correlation I draw is, the first two, you had a Republican Congress, right? Which makes me quite, how much does the president himself matter in all of this, right? If you start studying the inner workings of government, administrations come and go, but folks have been in Congress for 50 plus years, right? Maybe they're the ones who are really running the show, and some of those special interest groups behind elections and whatnot. So interesting, again, you hear the noise of the buzzwords of today, doesn't matter in the long run, right? Maybe we just have to tune some of that out. I want to touch upon some of the things that are kind of driving the noise now that we're dealing with as we start looking at what's going to happen politically. I believe Hunter gave out a white paper that Family Focus prepared. It's going to go into some, you can do some more reading on some of the nitty gritty of what we're going to touch on. But I'm going to keep it high level for tonight, not to put everybody to sleep because you're going to drive home, right? Key point here, we're spending $2 trillion more than we're bringing in. We're deficit spending, and it just keeps going, right? So looking at GDP, right, gross domestic product, compared to our debt, as you can see, since World War II, look where we are today. We're right back, and we're not fighting a world war right now, right? We're past COVID. We're past the 2008 crisis. So this is just normal spending now. It's become the new norm. So can we sustain this, or a hard change is going to come? Where's our money going? So mandatory spending is already 62% of our budget. That money's spent, right? Unless some drastic cuts are changed to what's mandatory, right? Discretionary, so mandatory, Social Security, healthcare, the interest on our debt. That's like the third biggest bill we've got now, right? More than we're spending on Medicare. How about that? And the national defense is right there with Medicare. And then we have, our discretionary spending, social programs, VA, education, transportation, and then everything else. So interesting. And then looking where our money comes from. We've talked about this in the past. Individuals pay the bulk of the tax bill, right? Even before the last tax code changes, it's always been this way, So you hear all this talk about corporations and you and I, we're the ones paying the bulk of the bills. And out of individuals, is a macro population, only about half of the adult in the country actually pay income taxes every year. So who are they getting money from? All of you, right? And then they talk, we have excise taxes, and we're going to talk about some of that other stuff tonight. But interesting. Again, where's our spending going? Look at the forecast. Social Security, Medicare, interest on our debt. The three big drivers. Are we going to cut any of those? Our revenue, our tax revenue compared to gross domestic product. As you can see, the average revenue is flat, right? Compared to our average outlay, which is continuing to increase. So you see, I can show you any variety of ways, right? The economic picture has got some warning signs here. So now we look to the new administration. And, obviously we had a Republican sweep. And, we want to look at what's coming down the pike here. So a few challenges going on concurrently. You have the tax reform debate, right? The tax code is going to expire the end of this year. It's going to go back to 2017 rates if they do nothing. I find that unlikely unless there's an impasse, which is possible, and analysis paralysis and nothing gets done. We've had shutdowns before, right? We've had past years with the tax code where they're passing it late December. Well, how do business react? How do the markets plan for that? So that could cause us some uncertainty. We've had cases where laws are passed in January because they can't even get it done, retroactively telling you what your tax bill is going to be for last year. So some of that went on during the Bush and Obama years. They just couldn't get their act together. So now we have a united government. You would think that wouldn't happen, but it's a very slim majority, and there's some disagreement in the rank. They're not all on the same page either. So you have two budget debates, meaning you have the House and the Senate, each kind of doing their own thing. And then they have this process called reconciliation where they try to bring it all together and hash it out. But you get one holdout that says, if I don't get X, I'm not voting for it. It could derail everything, right? And then you have the debt ceiling debate, So Trump's message is, I want to tie it all together and basically shove it through, get it done, however you want to look at it, right? Others are saying, no, one thing at a time here. We're not just going to give a blank check on the debt ceiling, right? Suspend it for the next 4 years. If it was such a big deal in the last administration, why are we just going to forget about it now? So again, a lot of these things transcend who's in the White House, right? Pick your side and you can pick your argument, I guess, to fit where you want it to be. But there's some heavy stuff here to be solved. So obviously the push from the Republican side, they want to extend the current tax laws, right? That could just be, hey, we're just going to put a 10-year extension on them and keep it going. I think that's unlikely. I think there's going to be some deal making going on, right? Some want more tax cuts. Some say some of the tax cuts were unfair and favoring the wealthy, and how do you define the wealthy, right? We're not talking about Elon, we're talking folks sitting in this room, considered wealthy by the federal government. So a couple of things that have been talked about, right? No tax on tips. So that's not going to affect most folks in this room. May affect your kids, your grandkids. No tax on overtime. That's interesting. And no tax on Social Security. So many of you know now, most of you pay tax on 85% of your Social Security benefit, right? It's taxed at whatever your ordinary tax rate is, right? So if we cut that tax out, right, that's like a big increase in your Social Security check. And the way the government can finagle that is, remember, Social Security has kind of got its own trust fund, right? And then the other money, will come out of the rest of the budget. We'll just put it in another column, basically. So sounds good. But as we talk more about Social Security, is that just a ruse to, hey, we don't have enough in this pot, so we're going to try and make it better over here? Maybe. But these are the things we're talking about. And then folks with lower income that are totally reliant on Social Security, they're not paying any tax on the Social Security now. So just keep that in mind as we talk more about it. Something else we've talked about a little bit, certainly in the past, everybody talks about New Jersey, the state and local income tax deduction, right? New Jersey has high property taxes. Our folks in South Carolina might be saying, well, that's your problem up in New Jersey. Come on down if you don't like it, but why are we helping subsidize your high tax bills locally? So you can see both sides of that, right? And what's fair. One thing that was not fair in the current tax code, the way they had to balance it to get the numbers to work, is a married couple could only deduct $10,000 in state and local taxes, and a single person could deduct $10,000 in state and local taxes. So it should have been double, you would think, if we're apples to apples, right? So a lot of married folks cannot itemize because they get capped, and they're paying at least double that, So one fix that's been thrown out is, well, we're just going to double it. 10,000, we're going to make it 20 for a married couple, right? And then they can take their other deductions that are currently in place. That's one possible solution. There's been some talk of raising it to 15,000 for an individual and 30,000 for a couple, right? That would have most folks itemizing if the standard deduction is about, say, 33,000 adjusted for inflation, because it adjusts upward every year if you haven't noticed. That was one good thing about the tax reform is prior to that, the laws were fixed. They said the deduction was 5,000. Well, it may have meant something in 1990 when it was passed. It's like worth a third of that today, right? So now the numbers do adjust for inflation. Mortgage interest. So any loans taken out after the 2018 tax law came in place, you can only deduct mortgage interest on up to $750,000 of housing. Well, in 2018, they thought, well, that was a pretty generous number. It used to be $1 million you could deduct, so they cut it back. Well, that was before the real estate boom, right? So now many of you have children, grandchildren trying to buy a house. They can't find in certain areas a house for that. Their mortgage is that. And now you're limiting what they can deduct. So, that's hurting the real estate market along with the high interest rates. So it's interesting. There's been some talk of cutting that back to 500,000. So I guess I look at that and say, well, who are we hurting here? We're not hurting the ultra wealthy, right? They're borrowing millions of dollars if they're borrowing money, or they're paying cash, as we see it in these real estate markets, both up here and down south. So I don't know if that'll go anywhere. I don't know if either of these will go anywhere. But I think politically, there's enough noise being made by Republicans in the Northeast. I think they're going to have to, deal on the state and local income taxes. Some other things that have been thrown out, letting us deduct credit card interest and car loan interest, because we all know the price of a car has skyrocketed, right? Credit card interest rates have skyrocketed. Separately from tax reform, Trump has proposed having a 10%, cap on credit card interest. And it may sound good, but will that cut off credit totally to some? We saw that after 2008. Folks would you had a credit card with no balance. You told, right, don't run up your cards. And then what did you get? A letter, oh, we're closing your card for no activity, or we're cutting your limit back to your current balance. And that kind of put a lot of folks in a tight spot. So expanded child tax credit. This came up during the campaign on both sides. It used to be $1,000 per child, age 17 and under. Then it went up to $2,000 with the current tax code per child. Now they're talking to $5,000 or $6,000 per child. So that'll help, younger folks with children a lot. There's other things that, like with childcare, letting you deduct now. I have clients that spend $10,000, $20,000 a year on daycare, and they're getting like a $1,200 tax credit. More I hear. So, and we're not talking fancy privates. We're talking, ones you see drive past every day. What about estate tax? You haven't heard a lot of chatter about this, but a couple things that right now, the limit's just under 14 million per person. So if one spouse passes, that's 14 million. They can protect that. The other spouse can still have another 14 million, combined $28 million estate, no tax due to the federal government. Go back to the Obama years, it was as low as $2 million. While Christie was still governor of New Jersey, the state limit at the state level was $675,000. Over that, you paid. $1 million estate in New Jersey had a $33,000 estate tax bill. So you see how drastic the changes have been. So, it's something I still pay attention to when I'm doing estate planning because laws can change, right? So there's still certain things, provisions we can put in to try and possibly double, whether it's 14 million to 28, whether it applies, 675,000 a double. But, we pay attention to this stuff because when you start kind of forgetting about things, right, they kind of come back at you. So we got to pay attention. So there's been talk of cutting it back down to 6 million. If they don't do anything, it'll sunset back to 6 million, or it'll stay at the current levels, or they'll eliminate it. We don't know. Regardless, you still have to pay attention. Like I said, at the state levels, New Jersey abolished the estate tax because they're trying to get folks to stay in New Jersey. South Carolina does not have an estate or inheritance tax. New Jersey still does have an inheritance tax, which is any money that is left to someone that is not your spouse or your children or grandchildren. So then you end up, like if you're cohabitating, you have a significant other and you're not legally married, you can get hit with a 15% tax on when you leave them, siblings, etc. So we've run into that a lot here. Trade wars and tariffs, right? Is it going to magically pay for everything, or is it going to, make things go crazy? Who's to say? But, it's a whole other layer to what's going on. We talk about abolishing the IRS, right? Because we're not going to need them anymore because we're going to have tariff money coming in to pay for everything, right? We laugh. It's not, you see a lot of fighting now with the IRS. They brought in agents focused on collections, which I can say personally, I have seen an increase over the past year of collection activity from the IRS. If somebody hasn't paid their taxes in the past 8 years and they were coming up on that 10-year statute of limitations, maybe they should pay something if they have the money, right? Why are we paying for it? So, trying to look at it both ways here. The flip side, I've seen some heavy-handedness with, questioning deductions and whatnot, which we were all told wasn't going to happen, right? We've seen some abuses of the IRS in the news. I'm not going to, go down that road tonight, but everything's got a balance is I think the point I'm trying to make. So will this all send inflation out of control, or will it help level the playing field? To be determined. So what will tax reform potentially cost us? Depending on what's enacted, what's cut, the guesstimate is just under $8 trillion is what it's going to cost to extend the current tax code, which if that's the cost, it's getting added to our deficit is what that means. All right. Social Security. We touched on some of the tax, noise going on here, but irrespective of taxes, only 79% of the benefits are going to be payable in 2033. So what are they going to do? They're either going to have to raise taxes on the Social Security, those paying in, which are now outnumbered by those receiving. So that's why the fund continues to go down. So either you're going to have a very large tax increase on wages. So we didn't raise your tax rate. We kept the taxes the same. But why am I taking home $200 less on my paycheck? Oh, Social Security, right? I get that all the time. Folks come to me, Pat, what do you mean I owe money? I took 30% of my check. And then you break it, explain to them where it went. That, that's not their federal income tax. That included all these other taxes. So, they're going to have to raise the retirement age, raise the taxes. There's talk of, of means testing it. Well, wait a second. If we're going to means test it, that means folks that basically are those that are paying the tax on Social Security, right? So it's not taxable, but we might cut the check that we're sending you. Well, did I get any more money? Did I get less money? What does this mean? Right? So you got to be careful of just, hearing a soundbite. I like this. I share it with you. Every year we get closer to the deadline, we get further away from the solutions. Isn't that right? Like 20 years ago, there was, right, Bush Gore, they were fighting over lockbox, and we could have fixed this, and kick the can. Here we are, right? Have we fixed it? No. So what can we do, right? I can tell you gloom and doom. What can we do to take control of our situation? Starts with a comprehensive retirement income plan. Kathy talks about this all the time, right? Where's your paycheck going to come from in retirement? Social Security is your building block, right? It's a foundation, but we all know we can't live on that, right? That's not the retirement we want. So we have to figure out what piece of that it is and what it may or may not be. So where's our retirement going to when's it going to start, right? Kathy, can I retire? How often does that question get asked, right? Many of you, when you first met Kathy, that was the question you had. Can I? Will I outlast my money? And go back several years before COVID, right? What was inflation? 2-3%. We used to talk at seminars, Kathy and I, and folks would argue, we said then, we factor 5% into our income plans, and folks will come in and argue. Oh, well, you're just trying to scare me. My money, I'm fine. Like they don't want to hear it. When they stress test, we'll talk about, kind of worst case scenarios, right? And you're still good. So that's all about the income plan, right? That's Kathy and Family Focus expertise here. Action item, get a written income plan, right? And know where your paycheck is coming from. Don't wonder. Don't, well, I'll take some money out of here or we'll wait and see, right? That's not going to cut it, regardless of who's in the White House and what's going on, right? If you have a plan, it has wiggle room for these ups and downs of, changes in legislation and whatnot. The way we see it, if you have the foundation, the rest of it is about how much of my paycheck's going to be, right? Hey, if things are, I have more money, well then great. I can do things. I can do legacy planning for my grandkids. I can help pay for their college. I can do these other things. But first I got to make sure I'm good, right? What can we do about taxes? And we've talked about this regardless of who's in office, right? You have your buckets, your taxable, something that every year goes on your tax return, right? So you have your brokerage account, you got interest and dividends. What do you get? A 1099 that then you send my way. And what do I do with it? I make you pay taxes on it, whether you took the money out or not. And how many? Well, Pat, I didn't touch that account. It doesn't matter. You still got to pay the tax on it, right? So that's taxable all the time. So you have $1, you pay 30 cents. You got $1, you got 70 cents. Got to wait for that to go up. So we've talked about how much longer it takes for your money to double when it's taxed every year. Okay, tax deferred. Those are your retirement accounts, right? You put the money in, you don't pay tax until it comes out. Besides retirement accounts, we have annuities that can do that for us, right? We don't pay tax until, or growth stock. You don't pay tax until you sell it. You're not paying tax every year on it. So things like that we could talk about. Then you have income tax free, right? Your Roth IRAs, good example. But they're still subject to estate taxes. People don't realize that. So if those estate taxes come back, that could be taxed, to your heirs down the road. The Secure Act also said, even though it's a Roth IRA and the beneficiaries don't pay tax on it, remember, they now have to take that money out over 10 years. So we couldn't just pass that down to the next generation, tax-free, which you used to be able to do. So something else they snuck in. Then we have income tax-free and estate tax-free. You know what that is? Most of the time, life insurance. Regardless of political party, they're both so heavily, they fund their campaigns off it. They're invested in it. You never hear them talk about it. It's like sacred. It's about, they don't touch life insurance, right? It's kind of like the bedrock of the economy, if you think about it. And that's where the ultra wealthy, they just keep rolling that. So, we've tried to do that, bring that to the kitchen table, right? Not just for the uber wealthy. So the more you have, the more you want to move along the process here. Action item, get a complimentary Roth conversion review. And what are we talking about? Taking things that are taxable or tax deferred and moving them to income tax free, right? Should you convert? How much should you convert? It'll depend on your personal income situation, right? Where the tax brackets end up. But this is something, Kathy and her team have the software to help do that. If you're working with me for your taxes, I can help, do tax projections. We put a strategy in place. We've helped many of you in this room, convert large sums, either to Roth IRAs or into other vehicles that'll also be estate tax free for legacy planning. Uh-oh, Hunter. Help. Is it?
Just a technical malfunction.
I feel good that I'm not the only dumb one.
I didn't do it. She always gets blamed when there's a file.
We're the over 40 crowd.
I need somebody under the age of 30 to help me. All right. I didn't break it. Okay. Investment performance, right? That's kind of knowing your number. What are you comfortable with? Ups and downs, right? And Kathy always talks to you, right? Before you kind of go into investments. So that's that conversation. Can you weather a loss, right? Obviously, the older you get, more experienced you get, let's say, right? You can't wait 10 years for the markets to come back if it goes down, right? And the worst thing you want to do is try to time the markets or panic sell, right? Because historically, you'll never win with that. Stay the course, but set the parameters that make sense for your situation. Diversify your asset classes, and that's again where Kathy works with you to do that. So we're gonna skip the action item. Get a complementary risk analysis. Stress test your investments to see, okay, if the market has a 20% correction, am I going to correlate to that? Am I likely to do better than that? Maybe I trade some upside for some more safety. These are the conversations. Do we have use some of our fixed options, right? That'll keep us out of the market, make sure our paycheck is safe and secure, right? That we know the national debt's going up. There's just no way around it. So what can we do to prepare for that? Like we talked about, tax diversification. Looking at where your assets are. So if we're in a high rate tax rate environment, maybe I don't need to touch something that's going to get taxed. Now I have things that were either tax free. I can, like, if I have Roth and traditional IRAs, right? I could take some from each to keep my income at a certain level. Many of you have experienced, besides whatever happens with income tax brackets, what other bracket do we deal with now? Medicare, IRMA, right? Wanting to stay within those numbers. That's not part of tax reform, and those numbers do not correlate. So that's always something in the back of your mind. Healthcare is becoming more and more of a concern, right? Maybe some of you starting to see with your parents, or you've already seen it, with the long-term care cost out of control. That's like the next hurdle we're all going to be facing. How do you handle a plan for that? So stress test your retirement and see if there's cracks in your foundation. All right. Just some kind of throw some ideas out here. It's kind of like idea time. As you talk with Kathy or myself, like we talked about annuities and life insurance, tax advantaged, active asset management, that's managing your investment portfolio and your risk tolerance, Roth conversions. Some of you who are into real estate, there's qualified opportunity zones and some tax advantages there. 529 funding, if you're looking to help your grandchildren. Gifting strategies. A lot of folks get fixed on how much can I give a year. I get asked constantly. So this year is $19,000 per spouse to any number of folks they want to give it to. So husband and wife can do $38,000 to each of their kids. Their kid spouses if they wanted to. Their grandkids. So you can gift a lot of money. No tax deduction to you for doing it. It's not income to them for getting the gift. Okay? Sounds good. What people don't know is you can give more than that, but you just have to file a gift tax return, basically reporting that you made the gift when you do your income taxes. So it's an extra filing, but it still doesn't make it taxable. What it does is it comes off of whatever that lifetime number, if it's 28 million, 14 million, 6 million. So, that this ties in a lot with estate planning, with the 5-year look back, if Medicaid is something we're trying to plan for. Because each year you make that gift, is 5 years from that, or it gets brought back in for Medicaid if that's a concern. So sometimes we do just punt and make the large gift in 1 year so that 5 years go by and then that person's Medicaid eligible. So whole separate conversation, but it's something that comes up a lot. So qualified charitable distributions, that's where you take your distribution from your traditional IRA account and have it go directly to charity instead of you taking it into your account, paying income tax on it, and then making the gift, right? Because you might be limited whether you can itemize, whether you can make a charitable, whether you qualify for the charitable deduction. So this is a way to kind of get it, just like when you pay for your health benefits through work, right? You kind of don't have to then itemize and meet certain thresholds. So, and assessing long-term care, which I touched upon. Then that goes back to some of the annuities or insurance strategies, that can have living long-term care benefits as well. So that's kind of a more modern way to address some of the long-term care, because long-term care insurance on its own is just astronomical, and they're not fixed premiums. So it's like the old life insurance policies, right? You hit 60, all of a sudden your payment's $1,000 a month. What do? You dump it, right? So have a comprehensive legacy plan. So we're talking about estate planning, right? We want to make sure it's probate efficient, make sure you've reviewed your beneficiaries on all of your accounts. Do they match what you want? If we want outright distributions, knowing that the rules are different for retirement accounts versus non-retirement accounts, right? What's subject to tax, what's not for income tax purposes. Is it tax efficient? Getting back to that. And are we family protection? Are we accomplishing what we want? In other words, you can just give money outright, right? Maybe your estate's not subject to tax. Tax-wise, it's neutral. But maybe, you didn't want to just give your kid $1 million outright. Something happens, divorce, creditors, whatever can happen. God forbid something happens, they're not around. Where's that money go? Does it go to a spouse because they didn't even have a will, or their wills just leave everything to each other, unintended consequences. So something I like to talk about is a bloodline plan, trying to keep some control so that money stays in the family. So we can do that, with trust, as far even like with insurance benefits that, we do with Kathy. We can do that with just other assets, estate planning. But, it's important to get your estate plan looked at, and see how that ties into all of this, assuming we've, overcome the income tax, hump during our retirement years. So schedule a strategy session with Kathy or myself. We're happy to talk to you anytime, as you know. And we're here to help. So hopefully you got something out of tonight. It was informative. And I don't know if Kathy wants to add anything.
I think there's a few questions.
Oh.
Does anybody here have questions? Pat?
It's on.
Hey, Pat, I have one question from South Carolina that came in while you were talking, but I didn't want to interrupt until we were done.
Sure.
Just real quick, they wanted to know if they don't tax Social Security any longer, will the trust fund run out faster?
If they don't tax Social Security, will the trust fund run out faster? No, because they're separate. That's what I was saying. Like, they may take it from one to the other, and it's kind of like a mirage, right? These folks now, they don't pay tax on Social Security. So if we're going to eliminate the tax, but then we're going to turn around and means test it, right? We're going to win or lose, and that's what all of this tax reform. There's winners and losers. As I went through some of the potential, what deductions might come back, which ones may go, So you're saying, wait a second, I'm subsidizing somebody's credit cards. I always saved. I pay my bills every month. Like, that's not fair, right? Some of you may say, well, if you have a mortgage of X dollar amount, that's a pretty nice house. Like, why am I subsidizing that? Like I said, folks down south may say, why am I subsidizing the taxes in New Jersey? So there's a lot of winners and losers to this, no matter what, So,
So Pat, do you feel, I think this is a question that we get asked a lot. Rich is here also. For those of you who have never met Rich, maybe some of you haven't probably. Rich is an advisor in our office. He's got over 18 years experience, so.
the way you get mic on.
Happy to have Rich.
Microphone.
along. Oh, you can't hear me. Can't hear me down south? Okay.
Anyone have to listen to
I
me
like
live?
this little furry thing on here. See, cute. Just decorative. For those of you that have not met Rich, he joined us last year. He's been a friend of Sean's for many years, and he comes to us with 18 years experience. So Rich has been a great asset to help me to keep things going too. We want to make sure you're continuing to get the great service that we always try to provide. So Rich will often meet with clients that are mine or his, just if I'm not able or if I get busy or backed up or what have you. So wanted to welcome Rich. He's been a real great asset to our team. And I also wanted to welcome Tracy. Tracy is relatively new. What are you here, like 3 weeks? 3 weeks? So Tracy's been a godsend too. She's very bubbly and personable. So she'll be the person that greets you when you come in the door. She's our our director of first impression and our everything right now, right? So Tracy's learning the ropes, so be a little patient with Tracy. We also have a new phone system. We've upgraded. We had Vonage in the past. Now we have a phone system called Ring, which allows us to do a lot more cool things, but we're not 100% with it yet, so bear with us there. It seems to be working pretty smoothly though, right? Yeah, seems to be going, even I can figure it out, which is a good thing, like, it's even me. So one of the things I think I wanted to really pin you down on, Pat, is how do you feel? What are you hearing about the tax cuts getting extended? Are you feeling like it's likely to happen, or are you feeling like nobody knows?
No, I think
Don't give me the lawyer answer.
no,
It
I'll tell you what.
depends, right?
I think the framework is definitely going to stay, right? Whether the deductions are where they're going to fight, whether it's the SALT or some of those other deductions that were up there, they could throw a few boomerangs in, but the framework, nobody's going to raise your taxes, right? So they're going to want to keep those brackets probably the way they are.
You really think so?
I do.
Okay.
That's
That's
my,
coming out of the horse's
I
mouth.
could be proven wrong, but that's my sense of it, is that we'll have an opportunity, tax rates will stay on sale.
Okay.
I didn't want to bore you with some of the other stuff about corporate taxes and whatnot.
That might not be applicable, yeah.
Right. But, so they're going to try and talking about playing with some
So
of
you
that
think
stuff.
that'll basically give us 4 more years of some specific tax planning, maybe to allow
I
us?
think it'll be longer
If they can
because
get it
they'll
through.
probably, they're talking about maybe a 10-year deal.
Hmm.
So we'll see,
Okay. Wow.
they want to take it out as long as they can because, again, if
So if they
administrations
don't
change-
tax Social Security, we know it's not going to cause the trust fund to run out any sooner
No,
or
it's
later. But if they don't tax Social Security and they don't have that revenue, which is pretty substantial for mostly everybody in this room pays
Mhm.
taxes on their Social Security, where are they going to make up that revenue? Are they going to pop up with something new? That's my concern.
That's why I said where there might be some boomerangs.
Well, maybe,
Doge
could possibly reduce those rates.
What's that?
Doge.
The efficiency quest, right? Is there enough to cut, there? Something I had on my note, but we kind of didn't touch on. I'm glad you brought it back up, Kathy, is everybody talks about wanting to make cuts, right? What politician ever wants to cut a program? Regardless of, you have some, okay, they want to cut certain entitlement. This one wants to cut all the rich. They bicker, they posture for elections, but how many years has some of this stuff gone on, right? You look at some of these folks, but you've been there for 30 years and status quo. So I kind of, again, on a personal level, kind of don't buy some of that noise. Is there waste in government? Of course, so yeah, if they can curtail some of that, I don't think it's going to be $8 trillion worth. I don't know.
I don't know.
We'd like, in a perfect world, that these trade wars and tariffs work themselves, to our country's advantage in some way, at the end of the day. Again, we don't know.
I think we really need to give it time because this is definitely a whole new administration. It's really, you got basically two businessmen running the country right now, right? Kind of, right?
Yeah.
Trump and his buddy Elon, but maybe they'll figure some stuff out that nobody else has ever been figured out, or maybe they'll be all wrong. So we just really have to give it time to see how it's going to play out. But I do think we need to continue planning the way we have planning. My philosophy is always plan for the worst and hope for the best, right? So let's plan like it is going to expire because that'll just put you in so much of a better place. Isn't that great that a lot of your IRA money is no longer taxable if you start doing Roth conversions aggressively, or you fund life insurance or some of those other things, or you use it for spend down for income? I mean, it's still going to put you in a better place, whether they change these rules.
Right, just
or
about
not.
how much, that's why I was talking about plate checks before, how much better off are you going to be? But if you took care of your foundation,
Yep.
you're good. This is all noise at the end of the day.
I think we should still keep planning like that things are going to expire. And again, it'll only put us in a better place later on. But a couple of things that are new that maybe we didn't touch on because it wasn't really in Pat's wheelhouse is we have some really great opportunities now in an investment class called alternatives. Now, I don't know if some of you are familiar with it or not. They're nicknamed alts. These are investments that are not correlated to the market, so they don't run in the same direction. They're privately owned, and they become more and more and more popular. They used to be only for the wealthy, for the ultra wealthy, and the average person was not eligible to participate. They've lightened up and changed some of the rules on that. So what we're seeing now for many of us to have a little bit of that in your portfolio, we're talking about private debt, in other words, private loans that they can make great interest on, private equity, investing in companies that are not publicly traded. We're talking about the energy sector. We're talking about sports teams. Oh my gosh, the money in sports teams is off the charts. And it's not ticket sales. It's streaming rights, it's merchandise, it's paraphernalia. There's a lot of money to be made in hockey, basketball, football, and what am I missing? I'm missing one. Baseball. There's huge money to be made there. So we do have a really great new alternative investment portfolio that we have access to for, yes.
Is this a direct investment?
Yes.
Or through an intermediary?
No, this is direct. So we can actually purchase it inside of your brokerage account. You know, there's a 16-page application that goes with it, but that's on Brian's. That's Brian's cross to bear. That's Brian's cross to bear. But, you know, the returns, I mean, no returns are ever guaranteed. But because it's not swinging with how the market swings, the anticipated returns are pretty strong. So you may want to ask us if you think you should have a little bit of that in your portfolio.
It's called
Alternatives, alternative investments. You know, typically you don't want to have more than 5 to 10% of your portfolio in what we call alternatives, but it's another way to diversify. The more diversified you can be, and what we mean is different asset classes. I don't mean diversified into what funds you own or what stocks you own. The asset class itself, you have some assets from the insurance world, you have some asset from, you know, the brokerage world, from stocks and mutual funds. You have some from the bond world. You have real estate, right? This is just life insurance. This is another asset class, and they don't all run in the same direction. So it really, the more diversification that you have, the better that you're going to withstand volatility. Because one thing is up, the other thing's down, and then you wind up with a much smoother ride, you know, all the way through. So if anybody's interested in asking us about that and see if it's appropriate for you, we can take a look at that.
What are the risks involved in?
Just like anything else, you know, it's an investment. The only negative I would say is that, and they invest their own money in these as well. So, you know, I would think that they're not going to put their money where they're going to lose it, right? So one of the negatives is they're not as liquid as if you had a mutual fund or a stock. Maybe there's a quarterly liquidation availability. So you're probably not going to use it for IRA money where you have to do RMDs and things like that. So that's one of the negatives, is it's just not going to be available like that. So you put some of your long-term money in there that you're not really going to use right away. Okay, so it's a good way to boost up your returns. And the main thing is to limit volatility by having a whole different asset class. That's really the goal.
Is it regulated?
Of course, but it's not publicly traded. Okay, these are all private. And so wealthy people have known about this for years and have this little club that they're able to invest in these things, and the rest of us were not able to. Now we are.
Since
So
when?
now we are. They changed some rules, you know, about qualifications within the last year. So just something if you want to look into it. You know, put a lot of money in there, but it might be a nice little sprinkle piece, you know, for some of your portfolios if you want to do that. I would suggest if you want to update your risk score, we could always send you a new nitrogen to see if your feelings have changed about that. Everybody's riding pretty high right now with the markets, right? But everybody's also a little nervous because we don't know what to expect, you know, with the new administration and what's going on. So stay off the internet, please. Please. I mean, I've gotten a few emails that they think this, you know, the sky is falling, the country is going to fall apart and go to hell in a handbasket as we know it. Most of those things are propaganda. It's propaganda. It's, you know, they'll tell you, oh, you better get out of this. This is going to happen. That's going to happen, because they want you to buy gold or they want you to invest in some kind of a trust or something. a lot of those things have an
They're all
agenda.
selling something. Exactly.
Yes, they're all selling something. So just call us. I mean, we have one of the best investment teams on the planet. Most of you got that capital markets assumption report. If you didn't, it's phenomenal. I mean, I read it cover to cover and I was impressed. And I even sent them an email and said, thank you very much, because now I feel like I have an advanced degree in economics, which I don't have. But I mean, they really put a lot of thought into that, really smart people.
But it's readable at the same
Yeah,
time. you know?
yes. Not only what they
Yeah.
think is happening this year, but also a 5-year forecast. Okay, nothing's written in stone, but if you can kind of get a sense, like we're in pretty decent shape. We're not really worried about the sky falling. Now, anything can happen. You know, what we don't know are the one-offs. You know, what if there's another war? What if, God forbid, there was something like a 9/11? Those are the things nobody's ever going to know. We can't really plan for that kind of stuff. But as far as everything else is concerned, corporate earnings are pretty good. You know, interest rates are at a reasonable, amount. Inflation, they're trying to keep steady, So things are really humming along fairly decently. So I wouldn't get too panicky about things. Harry.
Yeah, what's your thoughts on Bitcoin?
Bitcoin, I don't have thoughts on because I don't understand the damn thing. I'm being honest. I just don't understand it. But yet, I mean, there are funds that just focus on Bitcoin that we can do. So there's quite a few of them actually, right? Yeah, ETFs that, have Bitcoin portfolio. But I'm one of don't invest in something that you really don't understand inside and out. So we were also limited for a long time that we couldn't even talk about it or recommend it. But now they've lightened up on that. So if you,
think it's here to stay?
what's that? I kind of think so. But, again, it could disappear. It's smoke and mirrors. Like, who knows? I mean, again, I don't know. I mean, there's nothing concrete there. So,
You brought up gifting.
yes.
I think probably looking around, there's a whole bunch of us that have been gifting for a while, all right? And really not keeping track of what we're gifting. You don't have a ledger that you gave $2.50.
You don't? I would have thought you would have had a ledger.
Don, you of all people.
Don, you have a ledger.
I'm shocked.
What happens if you are gifting over the limit and don't fill out the forms?
There's really no over the limit, like Pat said. It just has to file it. There's a form, a gift
Yeah,
tax.
Don's talking about if you don't
Yeah.
file a form. So,
Answer that one. That's
the
your
technical
question.
answer is you're supposed to kind of come forward, ask for a waiver of penalty. Most of the time it's okay.
If you
it
get
won't be
caught.
an issue.
You
Yeah.
gotta get caught.
I can say it hasn't been a high enforcement area.
It's-
If it's
yeah.
a couple dollars, they're not chasing after, or you gave 40,000, you're only supposed to give 38 as a couple. Like,
Yeah.
they're not going after people on that level.
They have bigger fish to fry than that.
Obviously
Yeah.
$1 million transfers in, by then it's getting triggered by a bank reporting anyway, right? Like when they're reporting activity. So, yes.
In our particular case, we've been gifting and not keeping any track of it.
You're probably
And
fine.
I'll guarantee you it's over the limit.
Yeah, you're probably fine. Right? Wouldn't you say? You're probably
Sometimes you can say it was a loan too. Like we run into that where sometimes,
Bracelets, Pat.
well, no, oftentimes the call comes, I want to help the kid with a down payment on the house, right? Or they need money for whatever it may be. So
Mhm.
sometimes you loan your kids money and then you forgive that later.
Yeah, I forgot
So
to
it
collect
becomes a
it.
timing. So again, unless it's crazy numbers, nobody's going to jail over.
I think David had a question first.
Question.
Yeah.
I've heard in terms of the IRS cuts that are being made, I heard that some number between 6,000 and 10,000 maybe are being cut. Do you have an idea as to where in the IRS this is happening?
You mean talking employees?
Yeah.
Okay.
Yeah, a lot of them are the new hires, David, which was supposed to be in the collections and enforcement side of things. So audit, either collections, like I said, going after people that truly should be paying something, or kind of enforcement, meaning like, hey, we're sending out a lot of letter audits, is what they were doing. Just trying to like question deductions, and whatnot. So that's where those cuts are, the new hires. So those that came on are gonna be the first to go.
And it's mostly in the sort of the audit area.
Yes, some in the service, right? Because I try getting the IRS on the phone, So this is where practitioners, you know, may see some frustrations, you know, trying to resolve issues on behalf of clients because there's going to be some cuts there too, unfortunately. So service will go down. Some of it will be deliberate to say, look what happened. We need our funding and our people back. You know, there's going to be some politics played there for sure.
Donna, did you have a question?
With the IRS, would it be a good
Okay.
idea just to have like a flat tax? Or how would they go about it? What would be-
That's been talked about, Bruce, going back 30, 40 years, right? It'll never happen in my estimation
No?
because government likes to have winners and losers, right? They like to manipulate the economy. You know, we want to give everybody, you know, there was a time everybody should own a home, right? We relaxed the credit standards, right? Everybody got a home. We had tax credits, deductions for mortgage, and then we had a crash, right? Then they tightened, they went the other way, right? The government likes to control. So flat tax, they lose all that legislative control. So I don't see it happening.
Do you have a question, Donna?
So if you give 38,000 as a couple to, say, your son or your daughter,
Mhm.
you can also give another 38 to your son-in-law or daughter.
Yeah.
That's tax-free?
Mhm.
It's
And
each
what
one of the
happens with
kids.
them? Do they get
It's
taxed?
not income to them either. You know, the only caveat is where you're getting the money to give them. So like if you're selling stock to do that, you got to pay tax on,
Right.
you know, but the actual gift transaction is not taxable.
I have a couple. Down
Mhm,
there. I
good.
just want them to hear on the mic. You don't want to, I know you can find, it'll take my voice. That's
Okay.
This one I think more for Pat. If we go to a tariff system, is this still worth doing Roth conversions?
Well, I think it will be in the long run because I think you're always going to have an income tax. You know, I don't think it's going to totally get eliminated. You know, again, if that happened, I mean, we're talking like having something totally out of left field that Roth IRA is not going to mean anything at that point, right? But I don't see that happening.
Okay. Another question was, how much of a deduction can you take against nursing home care with your IRA if you're using your IRA to fund it?
So typically it nets out because if you're taking large distributions, your medical, you know, obviously the first 10% of your adjusted gross income is not 7.5% for medical. So you'll lose a little bit, but your standard deduction usually kind of covers that gap. So folks that I've seen where they're doing large drawdowns primarily to pay for nursing care, it mostly nets out.
So Pat, you don't think the brackets are going to change, right?
I
But do
don't-
you think they're going to go back to itemization instead of standard deductions? Do you think they'd break that up, or you think the whole thing is just going to
I
stay
think
the way
SALT
it
is going to determine a lot of that because if they raise where the state and local income tax threshold, that's going to make folks be able to itemize because now, let's say the standard deduction is 32,000 and I have 20,000 of property taxes, right? I may have 10, 12,000 of medical and charity, especially if they add some of these other interest deductions, everybody's going to be itemizing again. You know, so that's going to be a tax cut, right? If we keep the rates the same plus increase the deductions, you know, folks with children, if they make it $6,000 a child as opposed to 2,000 you get now per child, you know, you're going to see a lot of stimulus in the economy. You know, obviously you always have then the Fed, you know, fighting inflation, you know, and we get back to the argument, what power does the president truly have over that, you know, over inflation and, you know, interest rates and whatnot. So I don't know if you have any thoughts on that, Kathy, as far as,
The Fed has
But-
all that control, I think, but what was
And
the
then
other
the
question?
last one I have for Kathy, now this one's going to go to, in regards to the alternative investments, which as we all know, there's all different kinds of alternative investments. So
Yes,
this is a little bit of a broad question, I think, but what is the approximate rate of return for these alternative investments?
crystal ball time.
Right.
Crystal ball.
Which, again, there's all,
I mean, you know, if you can get 10 to 14% on an alternative investment, would you consider that a good rate of return? And rates of return are never guaranteed. So let me just put that out there, but that's kind of what, you know, they're shooting for at least that. So, right? Any other questions? Any questions for out in the field? I know there's what, 30 people that are elsewhere?
there's
on-
25 people online.
25 people streaming
Thoughts on precious metals?
precious metals. again, it's one of those things where if you want to have a little bit in your portfolio, but I wouldn't run out and buy gold,
Don't buy gold bars.
gold bars. I mean, it's a nightmare. Yeah, and there are funds that contain precious metals too, so I
I
wouldn't.
invest in forever stamps.
Rubber stamps, you want your coin collection, Anybody else have questions?
Do you have a list of the alternative funds?
It's one particular fund that we have access to now.
Oh,
So, yeah, I mean, we can do others too, but this one is really awesome.
Okay.
Yeah, it's really awesome. So, and you have to be qualified to be able to invest in it too. Hey, Stephen.
On the matter of gifting, if you don't have any children, is there like nieces or nephews? Can you do?
Yes, it doesn't matter who you gift to.
Doesn't matter.
I'll take a
Right.
check.
Yeah.
I'm just kidding. Just kidding.
On that side of that
Just
legacy,
kidding.
one thing important, since the gifting topic is popular, it also comes, it could be an outright gift or it could be a gift to a trust. And we've worked with some of you to set up legacy for the grandkids where, maybe instead of just putting a certain amount of, giving them a check to go do whatever, we're creating a legacy plan with that. So every year you're kind of doing maybe a drawdown from an IRA, or hey, you're fortunate enough that you've got play money, right? And you put it into that trust so that we're passing tax-free legacy. It's getting it out of your estate for potential Medicaid if that becomes an issue down the road. It's, circumventing its estate tax and income tax-free, so that we don't care what happens to all this noise. We've efficiently handled some of our estate and possibly multiplied that into a bigger legacy.
What are you feeling about capital gains tax rates?
They're not even talking about it. So I don't see them raising any specific tax bracket numbers. There's been some talk on the, again, ultra wealthy, which even now there's some provisions that kick in that none of us, care to talk about. But, like if you have $10 million of gain in a year, there's a different treatment,
Yeah.
to those of us here, it's not going to change, and there's also favorable, they're not going to change the rule with selling your primary residence if you've lived there for 2 years. Husband and wife can exclude $500,000 of capital gain. So that's helping a lot of folks that want to downsize, right? And again, that's creating a pot of money potentially that we can do some estate and legacy planning with.
Can you talk a little bit, because this comes up occasionally and I asked you a question about it too, about 1031 exchanges?
Yep.
Because we do have a few clients that have a lot of investment property
I was going
or,
to bring it up when you're talking about
oh, see that?
Yeah,
We great minds think alike.
Yeah, we do.
That might have a home, especially at the Jersey Shore, that's now worth a couple $1 million.
So
or
1031 exchange, it's, I just mentioned the primary residence sale, right? We're talking about the sale of a rental property, potentially a second home that you've had to treat it as a rental, so that's something we'd have to work out individually as to which is it. But if it's a rental property, you can sell it, take that gain and invest it. And this is where you can't just keep the money tax-free, but you can defer the gain into another property. So, a lot of times folks say, I don't need more real estate, or sometimes they do. They get, maybe 2 places, or they diversify. I've had a lot of clients sell their commercial property now, like get out while the getting's good,
A building.
get out
that
of
they have
retail,
Yeah,
strip
might have a building
malls.
with their practice was in or
But,
something like that.
I know,
Yep.
Kathy, you have
Yep.
some, there's also 1031 like funds that you can put the money in where you're not hands-on actually running a property anymore.
Mhm.
So we've had some clients do that as a way out, defer the gain, have someone's going to generate an income without, having to have the usual landlord headaches.
Mhm. And then when it's inherited,
When it's inherited, even better, they get a stepped up cost basis, which means even though you defer the gain, the kids aren't going to pay any tax. So
They're not
now
gonna
they
get
got
hit.
basically the money from the sale tax free. So, again, I've seen a lot of folks, they're selling, they still have property in New York, the families made the migration to New Jersey, where they're going south, where they've sold that rental, multifamily home and, basically sheltered that money. And then it's eventually passed down because they bought these houses for $50,000. Now they're worth $2 million. So, we see obviously the shore house is the same thing.
Yeah.
Real estate down south's appreciated, as well, as we know. So,
speaking of down south, everything's doing really well down there. Hi, down south. We're loving it, and our office is growing there, and we'd love you to come visit. It's a really fun place to visit. We're right near Savannah and Hilton Head. So if you're ever flying down or taking a road trip, you're always welcome. Just let us know. And, we could even put you up somewhere. So just let us know if you'd like to take a road trip. It's really beautiful.
If you see on HGTV, they're Bluffton, the houses for, a house, a car, it's a whole contest.
Really? Oh, yeah, for charity. Yes, for charity. Dream home, the dream home. Yes, yes. Yeah, no, they picked that area now. Yeah, it's really growing. Growing a lot.
Give it back and take cash. If you
Eh.
can't afford it, they do.
Any other questions anybody have?
You mentioned that right now you're active in one alternate.
No, we're not active in one. I'm just saying this is a new one that we've gained access to, which we really like.
When you say
There's
fund,
others.
When you say fund, does that mean there's multiple commercial interests in that line under the fund?
It's not necessarily commercial interest. There's private debt, private equity,
Oh, I'm saying like
various
sports memorabilia.
various asset classes
gambling.
within that
That's what you mean
alternative.
by commercial.
Yeah. Yeah, there's various assets in there. Yep, diversified. Yep. All right, guys. Well, if you don't have any other questions, thanks for popping in tonight. Hope you got a couple of
Thank you.
things. Thanks, Pat, for giving us your perspective, and everybody stay healthy out there, all right?
Yeah, let me just get this turned off, David.